Welcome back, everybody, to Volatility Trading Strategies. So the very first volatility exchange traded product hit the market on January 29th, 2009. Of course, I'm talking about the VXX, the original gangster of the volatility space. And just a few days ago, it did another one of its famous reverse splits. You can see here, this is now the 7th 1-to-4 reverse split in its history. Now, we did a whole live stream just a couple days ago and covered everything from the shares to potential issues with the options market, right down to predicting the next reverse split date around September 2025. You can check out that live stream at a link here if you missed it. But really quickly, reverse splits don't actually do anything to the value of the shares that people hold. All that happens is they multiply the current share price by 4 times, and then they reduce the share count by 4 times as well. On a net change basis, nothing at all happens. It's a complete non-event. But every time there's a reverse split in the VXX, the UVXY, the old TVIX before it was delisted, every time it happens, I do get bombarded by emails. Let me show you a quick chart of the VXX and you'll see what I mean. This is what the VXX looks like since its live launch inception on January 29th, 2009. It went from a price of $1,638,000 down to just $43 as of March 8th, 2023. Very diabolical indeed. That's down 99.99% since it launched. But you can probably guess the question that I get every time one of these splits happens. Maybe you've got that question right now. Was the VXX actually ever trading at 1.6 million? That's what I'm going to answer for you right now. So if you look at a long-term chart of the volatility ETPs in your trading software or something like Yahoo Finance, you're going to see some crazy high numbers in the past. But the important thing to focus on here is those are just what's called split-adjusted prices. The VXX never actually traded at 1.6 million, even though your software will make it look like it probably did. Now in live trading, long-term, it's typically in the range of about $10 up to about $100. Anywhere in there is normal. But the reason it shows such high numbers in the past is every time there's one of those reverse splits, it's retroactively adjusted going backwards. So I can show this really quickly how it works. The VXX officially launched at about $100 on January 29th, 2009. And as I showed, there's been 7 1-to-4 reverse splits since then. Well, all you have to do is take $100, which is what it launched at, and multiply that by 4. And we'll do that 7 times for the 7 reverse splits since 2009. So $100 times 4 times 4 times 4, we'll do that 7 times. It equals 1,638,400. So minus a few rounding errors here and there, it's close enough. That's that 1.6 million number. People sometimes think, oh wow, it's trading at $50 right now. If I just buy this thing and hold on, maybe there's going to be a big volatility spike and it can get back to some of those insanely high prices. Maybe I'll make a bunch of money. Well, unfortunately, no, that's not how it works. Volatility ETPs derive their price based on VIX futures, and loosely speaking on what we call the roll yield, which roughly 82% of the time it is positive, and that means there's going to be a headwind for something like the VXX and it's going to cause further downward decay. When it approaches around $10, they reverse split, it goes back up to 40 and rinse repeat. This is its past, and it is its forward trajectory as well. It's never going to get back to those insanely high prices of the past. Those are always just split adjusted. Things get even worse when we talk about the UVXY. This is a 1.5 times leveraged ETF, and before 2018, it was actually a 2 times leveraged product. The Volpocalypse event in February 2018 caused them to take that down to just 1.5 times. But this added leverage over the VXX means that it actually splits even more often and for larger amounts. This is the split history for UVXY, and we can see there's been 10 of them. 1-to-4, 1-to-5, even a few 1-to-10 reverse splits. Remember what's happening there. Let's say the price was $5. The price is multiplied by 10 and it's gone up to 50. And then the number of outstanding shares is reduced by 10 times to make sure that there's no value that changes. But it also means that when we multiply that going backwards, even using the 1.5 times leverage all the way back like this chart is, this is simulated using 1.5 the entire way, we still end up with an insane split adjusted launch price of over 17 million. And if you look in your trading software, this is Thinkorswim from TD Ameritrade, it's not doing the 1.5 times, it's actually using some of the 2 times leverage that it was before. And so now when we retroactively split adjust this thing, we're talking about a price of over $2 billion at the launch in 2011. And if you'll notice, it's now down to $6. From $2.5 billion all the way to $6. But again, don't get confused by that. It never actually actually traded in the billions. In fact, it never even really traded very high. It can deviate a little bit if it decays a lot before a split, or if there's a violent volatility spike, but more often than not, you're talking about double-digit ETF prices. So the moral of the story is, if you are looking back at those crazy high prices and thinking to yourself, well, if I just buy these shares and hold on for the ride, I might multiply my money when this thing springs back into the millions or the billions. If that's the case, I'm sorry, I've got some bad news for you. It's never going to get back to those prices. Now, markets do crash and volatility spikes happen. They will see periods where they could spike as much as 1,000, maybe 2,000% in an extreme crisis. You definitely need to have solid risk management, and of course, don't ever take on undefined risk. You never know if there's going to be a flash crash or a cyber attack. You always want to make sure that you're protected. But the long-term path is downward. These are insurance products, and they behave like it. They do decay downward because of that positive roll yield. Remember, being a contrarian in the volatility space usually just gets you broke. So for an extensive volatility metrics dashboard updated daily, and to see all of the live trades for our tactical rotation and option strategies, click this link right here and claim your free trial to the VTS community. You're always welcome to join us anytime. See you next time.